Can we talk about the way that you go about measuring this data? In fact, how are you remunerated? Who gives you money to exist? How does it work?
Well, we're owned by the gold mining companies. They formed us, I think, now 33 or 34 years ago.
Yeah.
And they're there to they sponsored us on the basis of the amount of gold that they produced. So for each ounce of gold that they produced, they gave us a certain amount of money, and to fund us to develop the gold market. And times have moved on. I mentioned before that we were instrumental in bringing the exchange-traded funds, gold-backed exchange-traded funds to the market. And because we were involved in the management of two of the big exchange-traded funds, we get some revenue from there as well. So we're no longer wholly dependent on contributions from members. It's a mixture of the two.
So it is unbiased research, unbiased, not necessarily advice, but information on gold market. Are you in any way influenced by outside groups to push gold when perhaps you shouldn't be?
Well, let's put it this way. When I joined the World Gold Council 3 years ago, I'd been in this industry for 32 years. The only reason I joined here, or the sort of number one condition that I had when I joined the World Gold Council, is that I would be allowed to be objective. And when you're producing data about gold demand and gold supply and what's happening in various markets, there's no point producing data when it's made up. You have to be objective. And I'll give you an example. We came out with our gold demand trends report, which is a quarterly report we produce looking at primarily demand, but also a little bit on supply. So we came out with our first quarter gold demand trends number. And I'm just looking through the headlines here. I've got the report up from Gold Hub. The pandemic slashed jewelry demand as governments across the globe imposed lockdown measures. Demand fell to the lowest on record, a 65% decline in China. We're not trying to sugarcoat what happens in the market. There are good things that happen. There are bad things that happen. In terms of our data and our analysis on this, we are objective as we can be.
Okay. Now, you've actually hit upon the next question, which was traditionally, I used to, when I was banking, did a lot of business in India and China, both huge gold consumers. Yes. on jewelry and as a means of saving. It's kind of, I think, when there's a bull market, people go, why go to the antiquated measure of hoarding, small amounts of gold under your mattress at home, and then times when times are a little bit tougher, or what people suspect may be coming down the line, it's in vogue again. It's absolutely in vogue again. But as you say, so China's been affected on the jewelry market, as has India. Do you think that is going to, after we get through this kind of COVID lockdown period, it's going to be a resurgence of buying again? Are we going to get back to the norms of before?
Eventually, I expect, depending on where the price is, but it won't necessarily be quickly. If you think about what happened in the first quarter, we had China going into lockdown first because that's where the virus seemed to affect first. So the China market was affected most in the first quarter. And now we're seeing the Chinese economy coming out of lockdown, and jewelry demand has improved from a very low level, but it's not growing rapidly at the moment. In fact, I'd argue that if you compare it to other aspects of the Chinese economy, it's lagging somewhat. So, I expect sequential improvements there, but I don't care how fast it improves. 2020 will be a poor year for Chinese jewelry. In the case of India, first quarter wasn't great anyway, and the lockdown mostly will affect the second quarter. I mean, I was talking to our managing director in Mumbai earlier today on a weekly call we have, and he says yes, the Indian economy is opening up again, but again, we're not expecting a very rapid increase or very rapid recovery in jewelry demand from India and China. And in fact, if you look across the numbers for the entire world, I think there was one country that actually showed year-on-year improvements in jewelry demand in the first quarter, and that was for very technical reasons, for something that was happening last year. So it's not going to be a strong year for jewelry. But in a way, this is one of the advantages of the gold market. Many commodity markets are one-trick ponies. So they genuinely are boom to bust. I was going to use other mining expressions then, but I probably shouldn't. Things go very, very well because of demand for auto catalysts in petrol cars, and I'm thinking palladium here. So that goes off to the moon, and then there's a switch over towards more diesel vehicles that took place, and then suddenly palladium's out of favor and it crashes back again. So there are a lot of commodities, and indeed a lot of assets, which are dependent upon a very narrow range of drivers. Gold's much more balanced. You've got investment demand, you've got jewelry demand, you've got central bank demand, you've got technology demand. So, pretty much every electronic good that you have has gold in it in some forms or another. And the big two, investment and jewelry, they tend to vie for dominance depending on what's going on in the world. So jewelry demand, very much driven by economic growth, prosperity, particularly in the emerging markets that really drive gold demand. So historically, India, now over the last few years, more so China, but you name the countries, Turkey, Indonesia, lots of demand coming from there. Investment demand is more Western-centric in general. We're seeing development of investment markets in some emerging markets, but generally speaking, it's a Western phenomenon, and that tends to do well when economic growth is weaker. And so the fact that jewelry demand has collapsed at the moment, partly because of the coronavirus, partly because of the rapid increase in the price, that's absolutely normal. Gold's being driven up by investment and speculation, so that's come to the fore and become the dominant market. Now, we will come out of this current coronavirus crisis. It might take a few years for the global economy to recapture the levels that it saw back in 2019, but it will recover. I'm sure these viruses will eventually be brought under control, either by vaccines or drugs or whatever. At that stage, I would expect to see investment demand as the component of the total decline, and jewelry demand picking up again. So very much, what I'm talking. You know when investment demand is weak, because I spend a lot of time talking about what's going on in the Indian and the Chinese physical markets. And you'll know when jewelry demand's weak, because I'm talking about ETF inflows and bar and coin buying in the West.